first, we need to understand that the private equity industry in Brazil is still very young. So, we went through cycles. So we had the first cycle until late 90s, where we had a lot of money invested, but the macroeconomic fundamentals were not there, and the way people did private equity was very different. No local presence, most of them, and so what happened was very bad for the industry. Nobody made money, everybody left. And then we went through the second cycle, which is from 2000, 2006. Very few players remain. Macro fundamentals improved a bit, but we didn't see a lot of deals or a lot of players investing. And then we came to this new era of private equity that started in 2007, where we see a lot of money raised, a lot of new players, local and international players, and managers started to get track record, and then they continue to raise more money. And the more important, the macroeconomic fundamentals are there. So people start looking at the country because the country was growing, because of the political economic stability, this large growing middle class, and people buying more stuff. So that's the private equity area that we're seeing now. And for investors in this industry, I think what makes this cycle now more attractive is that while in the past the only way to make money was buying cheap, because there were no growth, very hard to improve the companies operationally, no leverage. So the only way to make money in private equity was through arbitration, buying cheap, selling expensive. Today, this cycle we have today, you have the possibility of making money through growth, because we see companies that are taking advantage of this growth of middle class and people buying more stuff. Leverage is expensive, but it's possible. More importantly, operation improvement. We see companies that, even though, despite of the size they have, you see that you can go there, add value, and they can become much better companies in terms of operational efficiency. And the arbitration, of multiple arbitration, is still possible. Even though the multiples went up, you still find it's still possible to have some arbitration there. So so today it's much easier to make money in private equity. And so that's why I think the next 10 years of private equity will be much better than the last 10 years. Well, I think first we need to understand the good demographics, right, that Brazil has. So it's a large, young, urbanized population. 192 million people, 70% below the age of 40, 85% live in cities. So that's very good demographics. Then we have this growing middle class that 5 years ago accounts for 35% of the population, today 54%. And the next 5 years will probably account for more than 60% of the population. And this middle class is getting more access to credit. They're having increasing in wages, so they have more disposable income, more purchasing power, and they're buying. And they always want to have access to certain items that only now they can afford to buy. So that's why you see industries like consumer retail, education, travel, healthcare, financial service, just growing at double digits. Brazil is one of the 5 largest markets for cars, women spending, cosmetics, beverage, and so this is, and still there are a lot of industries where the penetration is very small, like education. So that's what is driving the Brazilian consumer. Well, I think it's very important when you make an investment. Basically, you have 2 alternatives: sell to a strategic or going public, right? So the stock market in Brazil has become much more mature, has developed a lot. So it's definitely mature enough to I mean, for private equity companies that want to get liquidity in the market. It's not easy as 2007, but definitely is much more feasible than 10 years ago. So I think stock markets, they are mature for that, but they become more selective. So for a company to go public today, you need a minimal size, you need governance, corporate governance, you need good internal controls and process, you need minimal liquidity. So if you have all that, definitely the stock market today is an alternative for you. Well, still we see a big gap in what the Brazilian GPs want and the local LPs want, right? I think the local LPs, in my view, still dictates the rules. So they want more control, they want governance, they want pay lower fees. And so some Brazilian LPs, they accommodate and they bring those investors. Some international GPs prefer sometimes not to have those local LPs. So still there's a big gap. The industry is, this dynamic is changing, but it's slowly. What happened is LPs, the local LPs have become more selective. They just don't want only GPs that accept their terms. They want quality GPs. The GPs on their hands, they have become less sensitive or less worried about everything that the Brazilian LPs want. So we are seeing some conversion. That conversion must happen because at the end, LPs must invest, especially with the declining interest rates. They have to allocate their money where they can get higher returns. And but it's a process that takes a longer time. Well, first, it's good to talk about that because since I was not in the ABVCAP in the last 3 years, it's better. It's more. I feel more comfortable in talking about good things that the other people did. So, well, I think the ABVCAP accomplished a lot of things, but I think the most relevant is more cooperation with other associations, with British Venture Capital Association, the Canadian one, LAVCA, IMPEA. More attraction of international investors and international LPs through those roundtables and other events. And most importantly, ABVCAP played a very important role in a very important and proactive role in the process of convincing the government to reduce the IOF tax on long-term foreign investors in private equity from 6% to 2% and then to 0%. I think that's, if I have, those are probably despite, for instance, all the agreements that they did with Inter-America Bank and with Apex, I think those are the big accomplishments of ABVCAP.